Hey guys, Joe with Bitraged. So I want to jump in here and answer a couple questions that we've been getting here recently. A couple days ago, we did a video where we said that, a lot of people are calling this a bullish run and it's all smooth sailing from here. There's nothing to encounter from here to 17,000. There are a lot of people saying that. If you go on TradingView and you look at the ideas, by and large, they are predominantly bullish ideas where they lay out irrational ideas. People are calling 17,000 and 14,000, and they seem to miss the point that we have experienced heavy resistance here in the past between 11,000 and 12,000. And if we just look at the past, we couldn't break it here. We see a lot of resistance in this area of the chart, and when we got into this area, we sharply fell off. Now that's what you want to look at. Trend lines are good and they are powerful, but what you really want to base your decisions on when you're trading is horizontal support and resistance. And why I say that is because it never changes. So it doesn't matter what time frame you're looking at on this chart. Doesn't matter what scale. You could be looking at log scale, linear scale. Does not matter. Horizontal support and resistance is always the same. Now trend lines, on the other hand, can be a little bit subjective, and it's more of an art than a science, but it does give you an idea, and it can draw out areas of support and areas of resistance. So I've drawn out here on the chart a box, and in this box is resistance. So how do we know this is resistance? Again, we just look back here in the chart and we look at all of this here, and we look at this here, all of this. So 1, 2, 3, 4, 5 days. 5 days attempting to get into this box, where the 5th day we fell off. We pulled back and attempted it again, and we fell off really sharply, as you can see here, as I'm sure you've already noticed. Now, that's why in the video we did a couple days ago, we showed you this box, we showed you this resistance, because it's a really key area that you want to look at, simply because of what happened on the 20th and what happened back here in January, at the end of January. That's what you want to be looking at. Now, you can put all kinds of chart patterns on this chart, and you can say that there's flags and head and shoulders and inverted head and shoulders and a whole bunch of stuff. And I'm not discrediting chart patterns, but what I'm saying is horizontal support and resistance is all you need. Now, like I said, trend lines can be really powerful, and it can help you to determine the direction of the chart, and it can help you draw out areas of support and resistance as well. But horizontal support and resistance never changes. So we are in log scale, and why we're in log scale is I want to show you something here. So if we draw out a trend line here on the log scale chart, you'll notice something very interesting. So if we just draw this out, we can say this trend line seems to be holding. Now, this may be coincidental, and why I say that is because we have all this resistance here already. So it lines up pretty well, and we do seem to be holding this trend line as resistance. Now, if you jump into a 4-hour chart, so here we are on a 4-hour chart. Now, just look at this trend line here. If you look at what happened, we seem to have fallen off almost directly on that trend line. So for 3 candles here, we kind of slid down the trend line, and these candles are 4 hours. So is log scale the one and only chart you should be using? Is it the go-to chart? And the answer to that is no. You kind of have to go with the chart, and you have to see what actually works with the chart you're looking at. There are some charts in, let's say, the stock market. If you're trading the stock market, I've seen some charts work really well on a log scale, and trend lines work really well on a log scale, and they don't work as well on a linear scale. So why is that? several reasons. If you're looking at a longer time frame, so if you're looking at a year, 2 years, log scale can be really powerful. It can show you things that linear arithmetic scale really wouldn't have shown you. The other thing is some charts, traders are looking at log scale. Some charts, the smart money will be looking at log scale. And so if smart money is looking at log scale and they're making their analysis on a log scale chart, making their trading decisions based on a log scale chart, well, then a log scale might make more sense. Now, we have seen Bitcoin respect a linear scale trend line as well. So what I would tell you is use log scale, use linear, and see which one works best. And I don't mean just stuff your analysis on whatever chart works better. What I'm saying is if the chart pattern seems to follow log scale better and more accurately than linear, well, then that might be an indication that the log scale is what is being followed. Now, it goes both ways. So we've seen in the past linear scale trend lines get respected really heavily, and we're seeing a log scale trend line here get respected here pretty heavily. So again, we are in resistance here as well. So maybe it's not as exciting as you might think, simply because we are at heavy resistance here anyways. So for those who don't know what log scale is and don't know the difference, a log scale chart is essentially a chart that displays percentages in an accurate way. So a move from $10 to $20 would be displayed as 100%, and that move would be displayed as larger than a move from $20 to $30. So a 100% move is going to look bigger on a log scale than a 50% move. Whereas on a linear scale chart, everything is evenly spaced. So a move from $10 to $20 and a move from $20 to $30 is going to look exactly the same. So again, all of this is pretty interesting, and as a trader, you want as much data as possible. So I would definitely recommend you look at log scale and you use linear scale, and you use them together, because log scale will tell you things that linear scale won't, and the linear scale may give you ideas that log scale won't have either. So one is not inherently better than another. They should be used in conjunction, and you really should determine what works best for the chart that you're looking at. Alright, if we just look at the chart here, we can kind of see that 10,200 is going to be support. So how do we know that? Well, we just base it on what the chart is telling us. So we paused here at this level, 10,200, before continuing. We also have these candles here come into this window here. And what you should understand about resistance and about support is it's not always a fixed point. It's not always an exact number. Many times, and oftentimes, it is going to look more like a window, more like a box that you'd break into. And there are points that are more serious and more crucial in that box. So for instance, 11,600 and 11,800 are pretty major levels, and we know that simply because what happened here. So that's something to keep in mind. So that's our target. This is our target box. 10,200 is going to be our target. Now, coming down at the rate we are, if we continue this rate, breaking 10,200 is not going to be an issue at all. That's going to happen quite easily. Coming back down through, we're going to be looking below 10,000. We're going to be looking at 9,300 and 9,500. That's where we're going to be looking. From 10,200 to 9,500 and 9,300, this box here, there's not a whole lot of support. So breaking through 10,200, if it keeps at the same pace, you're going to see 9,300, you're going to see 9,500. All right, here we are zoomed in, and sometimes when you zoom in, you can see things that you wouldn't have seen zoomed out. It's a lot easier to see the finer details. So looking at this box here, we can see pretty easily why we based this here, right? So we've seen quite a big run off of 9,300. Quite a big run off of that. Coming back down to here, we saw a pause at this point here before continuing. We also saw it come back down to test 9,500. And so we know that 9,500 is going to be support. Up in here, this box here is not perfect, but it does give you a good idea of what we're looking at. So 10,200 is the likely target at this point, but you can see we do have some support in this range here. So 10,500. So I want to bring this to you, and I wanted to talk about support and resistance and kind of show you guys what we're looking at should we continue this run, because ultimately that is the most important thing that you can look at for any trader: support and resistance. So real quick, as we close this, I saw an idea on TradingView where somebody said that we're looking at a double top, which is a bullish signal. And I thought, so a double top is a bullish signal. What about what happened here? That's not a bullish signal, is it? What about this here? Well, that's definitely not a bullish signal because we fell off from there. So a double top is not a bullish signal. No idea what that guy was talking about. A double top is definitely not a bullish signal. In fact, it is more of a bearish signal than anything, simply because if you test something twice and it fails twice, the odds of bears taking over at that point is a lot more likely. Volume has come in, and we basically doubled in volume on GDAX, Coinbase, and we went up by quite a bit on Bitphoenix and some of the other ones. It came in when we were selling, and that has been a pretty consistent theme. So we started selling, volume started coming in even more. We started selling, volume came in, and then when we started buying again, volume kind of stopped. As we went up in price, volume has been going down, but as we drop in price, well, then volume picks up again. That's not a good sign. That's not a healthy sign of a bullish market. Anyways, guys, that's pretty much going to do it for this video. These are some levels that you can look at for support, and you can see what happens from there. And it really boils down to that. It's as simple as that. You don't need any fancy indicators. And there are some we could look at, and there's some really interesting things on some of the indicators, but I didn't want to draw this video out too long. I just wanted to show you some very simple support and resistance levels. So we've been consistently saying the same thing for a long time. Several weeks we've been saying the same thing, and we've gotten some flack for it, but essentially all we've been telling you for the past several weeks is look for support, look for resistance. Here's where it is in the chart. Base your decisions off of that. And this is a prime example of why we've been saying that. If you base your decisions off of resistance and support, you would have seen this coming. And we did a video on this. We did a video where we showed you this level here, this box here to watch. If you trade with support and resistance, you're going to find that you'll be much more successful than if you're trying to place chart patterns on the chart and you're trying to make every chart pattern just fit into the chart no matter what it says. Chart patterns are good. They can be powerful. Support and resistance is king. That is what you want to really master. So that's going to do it for this video. Thanks for watching, guys. If you have a question, you have a comment, leave that in the comments and I'll try and get to as many as I can. We genuinely appreciate your support. Take care, guys.